Good morning, everyone. Happy Friday, December 22nd, 2023, in and around the holiday season. So I love having you all here. I'm seeing a lot of new names that I haven't seen in quite a while. So thank you all for coming to my complimentary live trading with Kait session. It's been a busy past couple of months with doing the live trading, the coaching, meeting with all you students in the coaching sessions and in class. So thank you for all being here. I'm excited to be here with you today and present, if you haven't seen my new way of trading, kind of give you some of that detail of what I look for and how my goal is to simplify trading with you. After I've been meeting with so many students over the past several months in coaching and in live trading, really getting to hone in on what you guys are looking for, a simplified approach, something specific that you can grasp onto, something where it really just kind of helps you understand the charts in a whole new light. So I'm excited to be able to take my years of trading experience and teaching and give you what I feel is the most important information you need to improve your trading all around. I know a lot of you in the room, again, a lot of names that I recognize, and thank you all for being here. Let's jump right into it. Why not? So starting off, I actually just did want to show this screen real quick. I didn't put it on before. Just again, giving you one of the testimonials from a previous student, actually from a couple days ago, as far as just understanding how the goal is to simplify things, make it quick and easy to remember different, pinpoints that we're looking at in the markets. And overall, it boils down to how do we view the bigger picture in the markets and how do we process that information so we can participate in longer running trades. So good to have you all here. Scott, great to see you. Shelly, excellent to have you here as well. Good morning, Ken. Torre, good to see you. Thank you for joining. So let's jump into it. And I just want to show you my caption at the top. And really my goal and mission with these classes is see the charts in a whole new light with my signature 2-candle flip. A lot of you guys have already started implementing it in your trading and just in how you view the markets, and really feel it's extremely powerful to understanding how to read the price better. So in jumping right into it, we are going to be doing some live trading today, so get ready for that. So my trading tip of the day, this is going to be the prep screen you get each morning in live trading with Kait. Give you a trading tip of the day, something that I feel is valuable to traders that you can really grasp onto and use and remember in the background during your trading days. So why many traders fail is because they miss the biggest market moves when getting trapped on the smaller time frames. Been there, done that. I've gone down so many different rabbit holes of getting lost on the 5-minute, the 2-minute, even the 1-hour time frame. You start to lose focus of those bigger market moves. How many of you guys has that happened to, where you get stuck on the smaller time frames and you kind of forget what you're looking to trade, or if you're looking to go long, if you're looking to go short? How many of you guys have been there, done that? Greg, good to see you. Yeah, me. If you haven't, I'm very surprised, and I'm not sure I would believe you. Ken, Jason, yeah, a lot of us have been there. There's so much information out there, we really don't know what to look at. So again, focusing on very specific information is going to help us to clarify things. So if you're one of those people and you're getting stuck on the smaller time frames and you feel like you're missing those longer running moves, it's going to boil down to a couple things, 1 to 2. Zoom out to see the bigger picture and trade with greater confidence. So I tell all my coaching students this, that my base foundation for what I look at and base my trading decisions off of is the daily time frame. So focus is on the higher time frames, but this does apply to the smaller time frames as well. So if you do like active income trading, I know a lot of you guys do, completely okay. This method applies to everyone in any time frame. I just want to, again, bring your focus on, if you are still struggling with trading and staying in trades longer, it may be part of the trading tip of the day, and that you're getting stuck on the smaller time frames. We want to see where the big banks and institutions are really looking to trade when we zoom out to at least the daily chart and higher. So our prep screen here is going to incorporate that and focusing on the monthly, weekly, and daily trends to get that bigger picture of, are we looking for long trades? Are we looking for short trades? We really should have a bias one way or the other based on the higher time frames. Yeah, so good to have you here, Shelley. All right, so with your prep screen grid, I'll be giving you some trade setups that are based on the higher time frame trends. So we have the S&P, the NASDAQ, Russell, and Dow. Now, to identify our zone trades, I'm looking at a 2-candle flip zone. Now, this is something you'll see me implement in the live trading sessions each day, but it's a very specific group of candles, just 2, where we often see these longer running moves to the upside. I'm not teaching it as much in this session just because it is for live trading, but you'll notice at the origin of a lot of these longer running moves, you'll notice a red candle coming down and a green candle that closes within the high and low of the red candle. Start taking note of that group of candles and you'll see that we often have these longer running moves when you identify that specific group of candles. So I identify that in the S&P, NASDAQ, Russell, and Dow, and then also giving you a spotlight trade, something that I feel is a pretty strong trade to identify for the day and has potential for the rest of the week as well. So crude oil, doing the same assessment, monthly, weekly, daily trend, ultimately boiling down to what is the daily trend? We have been in a pretty big uptrend on crude oil over the past several days and couple weeks now. So I'm looking to trade with this trend to the upside in identifying our 2-candle flip. You'll notice my entry is going to be 74.90. So on this chart, looking to take a breakout trade to the upside, my stop is going to entail identifying a 2-candle flip zone. Now I've gone ahead and identified one for us now. You can see we have a red candle coming down, green candle closing within the range of the red candle. So that's a 2-candle flip I'm using to manage my risk on a breakout to the upside. When we take breakout trades, we want to understand what our risk is ahead of time, try to keep it as close to $100, $150 as possible when taking those breakout trades, just so we're limiting our losses while extending our momentum and our profits in some of these longer running trades. So I'm looking for a breakout above 74.90 and placing our stop based on a 2-candle flip zone. This one currently our stop would be at 74.05 with an entry of 74.90. Who can do that math real quick? If we're taking a breakout at 74.90 on crude oil and placing our stop at 74.05, can anyone quickly calculate how much risk that would be if we just based it off of this previous 2-candle flip? On the full size contract, what would our risk be on that trade setup? 74.90 for an entry, stop at 74.05. So 1 point on crude oil is how much, depending on if you trade the micro or the full size? So close. Depends if you're, trading the micro or the full size. There we go. Get into a couple closer to the numbers. Yeah, so around $750 of risk. So remember, 1 point crude oil is $1,000. If you're trading the full size, if you're trading the micro, going to be 1/10 of that or $100. So nearly 1 point worth of risk on crude oil is going to be closer to $1,000. I think Lon got it. 850. There you go. $850, Len, you're the winner of the calculating the risk, which honestly we should all be doing ahead of time before getting into trades. If not, always take out your calculator. You can calculate the risk real quick. But yeah, make sure you know what the risk is ahead of time. In this example, taking a breakout at 74.90 with a stop at 74.05 is $850 worth of risk if we're trading the full size contract, because 1 point on crude oil is $1,000. So that's part of it as well. Again, if you are struggling with risk calculation and profit potential, I would say, that's an important foundation that we understand our risk ahead of time prior to entering any single trade setup. I mentioned I try to keep mine within $100 to $150 risk per trade, just so if I do get stopped out, I can re-enter trades afterwards. And then news and economic events, it's important to keep an eye on some of those market moving reports that can greatly impact the markets and our trades. So we do have several today. We already had durable goods orders and personal income and outlays, 8:30 a.m. Eastern time. Moving forward at the end of our session, we'll have new home sales and consumer sentiment. So a couple big ones that we want to pay attention to. My site that I always take a look at in looking at economic reports and events is econoday.com. And you can check this once a week. You don't have to check it every day. Just take a look at which reports have the red star on them. Those are going to be the market moving reports. So the one that's coming up at the 10 o'clock reversal time is going to be new home sales. Market moving report, because we've got the red star on it, also at 10 a.m. Eastern. So a lot of you know who've traded with me in the past, we look at the quarter hour, the 10 o'clock reversal, some of those key time slots where we often see price change direction. So looking for zones when we see economic reports come out, when we see the quarter hour, 10 o'clock reversal, those can be some really good odds and enhancers for us. All right, so we've spent enough info and enough time on the background. Let's jump into the charts. Let's get right into it. Hey, Daryl, let's see, on oil trade, you will go long at 74.90. Yes, so that is the goal, is to go long on a breakout. Now, the reason why is this pink rectangle is showing where the sellers are coming in. I was explaining this to someone yesterday. I'm not sure if Colette is in the room, but I found it to be a really good analogy. I think will help other traders, is understanding that trading is really a battle between buyers and sellers. Now, when you can see and visualize that battle back and forth between where the buyers are coming in and where the sellers are coming in, you can visualize where those key market moves are at. Colette, I'm so glad you can make it. Did you see our micro gold trade made profit? Okay, now I'm just going to jump over to micro gold. This is one we set up together yesterday in building her trade plan and putting all the pieces together. Really nice trade, micro gold. Not sure if anyone was keeping an eye on this one, but we did identify all those pieces of information. We traded one micro contract on gold, gave us her target price, was in trading micros, looking to make $100 profit per trade, with a risk of around $30 to $50. So if you want a customized trade plan, that's something that can be done as well. Micro gold is up, let's see, 1.4%. Now we were able to get in on the breakout by visualizing that battle between the buyers and sellers. Now, some other piece of information that we talk about in live trading is, do we have a 2-candle flip pattern, which is the signature for looking for the origin of some longer running moves. There was one right down here, 2-candle flip. We got a nice breakout to the upside. So we're looking to get long there, and some other piece of information we incorporated in taking that breakout trade. But if you can identify that battle of where sellers are coming in, for me, I mark it with pink boxes or red boxes, whatever works for your eyes. And you can see that those stacks of sellers are getting completely blown through. Sellers are taken out by the buyers. That can give you some insight prior to taking a trade of what side of the trade do you want to be on. So great job in finding this one, Colette. And again, making that $100 profit per trade. We had a $30 risk in play, just based on looking for about a 3-to-1 move. And you can see gold has just been rocketing to the upside since then. So we got a couple other setups we're going to go over, but just wanted to highlight that one. Let's see. So that's micro gold. Let's see if we have anything coming up today. So we're also looking at crude oil. This one also working out. Now, former students, what can we see here on crude oil that indicated we were going to have an update today? Now, even if you're new, you may be catching on to what I'm looking for, but today crude oil is up 1.02%. What did we form on the daily chart that led to more of an indication today was going to be an up day? Any thoughts? Good job, Scott. Let's see. Scott says green candle closed within red. There you go. That's the answer I was looking for. That is our 2-candle flip. Look for the 2-candle flip. There we go, Daryl, Colette. Yeah, see? Putting it all together, you can identify the 2-candle flip. Importance, higher time frames, that's where most of the information comes in. Then we can use it to implement on the smaller time frames. Good job, Shelly. We've got our flip. Ash also bringing in some additional information. I love it, outside day. So outside day, we incorporate on the equity indexes, but I like doing that here as well. So I'm gonna bring that in, Ash. If we mark on the daily chart, the prior session's high and prior session's low, make those lines a different color. Sometimes I'll make them blue just so they stand out a little better. When we break the high or break the low, oftentimes that can indicate more of a trending move, especially on oil, since we have been in more of an uptrend. We're looking for those long trade opportunities. So great job, 2-candle flip, outside day, all correct answers. And so in seeing all that, makes sense then why our spotlight trade is crude oil. Now, since we had the 2-candle flip, as you mentioned, we're looking to find our entry point on the smaller time frames. So Daryl mentioned before, we're looking to go long at 74.90. Currently, we're at 74.69. So let's drop down and see if we can place a trade out there. Gone ahead and dropped it down to the 15-minute. Here's our 2-candle flip zone. And if you want to back test it and the 2-candle flip is new to you, just take note of where we've had previous 2-candle flip zones and notice price coming back to those areas and changing direction. So we had just starting on the left, 2-candle flip, red followed by green. Price held it once, held it twice. Great trade opportunity here yesterday where price just dipped into it barely and had this move to the upside. 2-candle flips are working, holding, moving to the upside. So now we're looking to use that as part of our information moving forward and taking a breakout trade. So mentioned before, we don't want to be taking $850 worth of risk on a trade. That is crazy, in my opinion, for one contract. Rather keep it around $200, $100 to $150 typically. So our breakout trade entry will be above where the sellers are coming in, where that battle is going on. The high point is 74.89. So our entry above that high is 74.90, which is what we have on our prep screen. To manage our risk, we want to find our 2-candle flip zone. Now I have this one down here. We don't have another one at this point, but that's where you can start to go down to the smaller time frames and look for your next 2-candle flip zone. So we don't want to, again, risk so much on each trade setup. We want to be able to risk a small amount and then profit as price moves in our direction. So I do see one here that was just formed on the 10-minute. We have a red candle followed by a green candle. We'll isolate that, and that will help us identify our stop placement in the breakout trade. Placing our stop at the low point of the 2-candle flip, we'll be able to place our stop at 74.44. See, hey Daryl, so the 2-candle flip just has to close inside. It is okay for the wicks to go above or below. Yes, good point, and yes, you are correct. Yeah, wicks, we don't care as much about the wicks. We wouldn't be able to take it so we have this 2-candle flip here right now. If, for example, a wick came lower, then the 2-candle flip is void at that point. So we want to see it holding and pushing in the direction in which we're looking to trade. So I'm going to set up this order, placing my stop at 74.44. That is outside my risk on the full size contract, but that is something where we could take the micro contract and trade that instead. So in looking to take the trade For breakout trades, we do a buy custom with stop. For breakouts, we're looking to buy at a higher price. So our breakout is going to be based on our prep screen trade, 74.90. 74.90. Buy stop. 2-candle flip to manage risk, 74.44. Again, it's a large amount of risk for the full size contract. That's where micros would probably be a better play if you're looking to reduce your risk on those breakout trades, which sometimes can give you a lot of momentum, but then also if price starts retracing against you, that's where you don't want to be taking on too much risk and just hoping price is going to go in your direction. I've heard that a couple times this week where people, remove their stops or they move it down in the hopes that price is going to go in their direction. We have our stops in place for a very specific reason, which is to cap our risk on each trade. We should not be moving them in any situation. So 74.44 for our stop based on that 2-candle flip. And now we're ready for the breakout trade. I like to label them just so I can go back to them. For those of you who like to document your trades, 2-candle flip. This one I found on the 10-minute time frame. We've identified that. And now a little bit trickier question. Can anyone identify whether this is a active 2-candle flip zone or is this a pending 2-candle flip zone? Is it an active 2-candle flip or a pending one? All right, got a couple people coming in. All right, yeah, even if you don't know, I like that you're answering. Good to be involved. So we've got 1, 2, 3 pendings, 1 not sure, 1 active, a couple more pendings. So if you said pending, you are correct. The reason is it only becomes an active 2-candle flip zone when we actually get the breakout. So in going back to that battle between the buyers and sellers right now, and according to the charts, the sellers are still in control because this pink box has not been blown through. So in looking to go long at this 2-candle flip, we can't go long right away because the sellers are still in control pushing price down, which is why it's a pending zone. It becomes active when we see confirmation that the buyers have taken out the sellers. That happens when we get our breakout and we get above those highs. So our 2-candle flip, again, it's pending because the sellers are still in control pushing price down. So can't be active until we get that breakout move. So in this case, we're setting up a pending trade and we'll be long on the breakout when we get our move above 74.90. I'm glad I asked that. Yeah, very important to understand the difference. Right now, we shouldn't be long because we don't have confirmation that the buyers are in control. That's only going to happen when we break above that resistance. Going back to the daily chart, remember our trading tip of the day was if you're struggling with trading, maybe you're stuck on the smaller time frames. When we zoom out to the daily chart, notice at the origin of this big move to the upside was our 2-candle flip zone. And we have it on the daily. We're seeing it on this next daily candle over here, you guys mentioned before. So those are just key indicators we want to remember and understand we're looking for long trades based on the long 2-candle flips. When we were in more of a downtrend on crude oil, we had these 2-candle flip patterns to the downside. So that indicated we were looking to go short as crude oil was dropping from $95 to $89. Here was a 2-candle flip at 83, so on and so forth. Now we're starting to see that shift back to the upside and these 2-candle flips forming as we're pushing higher. Again, oil, if you're not in already, we're already up 1.12%. So again, We want to get in at the origin of these moves before price moves up 1% or more by finding these two candle flip patterns. So we're pushing higher. We're ready for that breakout trade on crude oil. Now that we've got that set up, we'll jump out to the equity indexes, just seeing how our micro gold trade is from yesterday. Yeah, great job, Colette, on that one. Nice move to the upside. Gold up 1.32%. And now we were waiting right at once the market opened is when we were prepping for that trade to get in sooner at the origin of these moves. I know a lot of people think that they tell me they don't watch the futures market open at 6 p.m. Eastern time, which I would encourage you to start looking at because a lot of times that's the origin of some of these big moves and you want to get in sooner rather than later, not waiting till the market opens in about 3 minutes because we've already missed a large portion of the move. So in my goal with trading, it doesn't boil down to a certain time of the day we trade. It doesn't boil down to what time frame we look at. But overall, looking for the origin of these longer running moves starts with getting in sooner, and it starts with identifying the two candle flip pattern. We've got 2 minutes till the market opens. Let's jump out to the equity indexes. We'll go over those. All right. Colette, I might put you on the spot for this one as well, but we've been going over these a lot lately. I'm just really proud of her for seeing these. Any other students, but what did we form yesterday on the daily pattern on the S&P 500? Daily chart. What do we have on the S&P 500? That was formed yesterday. Can we see what that group of candles is? There we go, Lon. Got our two candle flip. Good job, Randy. Continuation pattern. Absolutely. So we'll start to talk about wick over wicks in our sessions as well. But the key thing here, two candle flips are absolutely huge. I could not emphasize that enough in looking for the origin of these longer running moves. Again, S&P, we're already up 0.2%. We want to be trading with that momentum to the upside. Here was another two candle flip a little bit lower. That was the origin of this move. So really using that as our odds enhancer in determining should we be long or should we be short. In this case, just step back and look at the bigger picture. Pretty decent uptrend on the S&P. So we should be looking to trade on our long trade setups, not necessarily the short trade setups. Continuation pattern, you got it. All right, so knowing that, let's drop down to the hourly chart. Get some more detail of what I'm looking at. So I do have a two candle flip pattern a little bit lower on the 30-minute time frame. Going to be down at 47.68. Stop at 47.55.25. So our two candle flips a little bit lower. A couple other odds enhancers we'll bring into the live trading sessions is when was the two candle flip formed? Notice that this one, when I drop down to the 30-minute, red candle, green candle closing within the red, that was formed on high volume during yesterday's session. High volume zones, nice odds enhancer for showing the strength behind the zone. So looking for a pullback and looking to go long at 47.68. Stop at 47.55.25. All right, now moving to the upside. I did also mention a support level. So here we have an area where price has come and used up a lot of the buy orders. So in case price comes down, I want to identify those areas where there's been a significant amount of buy orders being used up. If we get a breakout to the downside, that would mean the sellers are in control on those short trades. Higher time frame trend is to the upside, so I am looking for more long trades versus short trades. Hey Tim, let's see. A lot of times I have seen a good quality 15-minute zone from the regular session gets triggered during the overnight session. I'm going to read that one more time. It's a very good point that Tim has mentioned, and it also helps emphasize the point of why we should be paying attention to the markets, not only during our live trading sessions now, but in the overnight session as well. So he mentioned from his back testing, Tim's been doing the 2-candle flip for a while now. He says, a lot of times I've seen a good quality 15-minute zone from the regular session, so formed from 9 a.m., 9:30 a.m. to 4 p.m. Eastern time, and it gets triggered during the overnight session. So sometimes trades happen in the overnight session. We don't want to exclude that. We want to be aware of that and getting into trades sooner. It can ultimately happen in the overnight session. I'm always paying attention to that. Make sure that we're aware of the market open at 6 p.m. Eastern time each day and being prepared for potential trade setups then to get in sooner, especially on some of those high volume zone trades that Tim was mentioning. So thank you for mentioning that. All right, we also pay attention to the stocks. With S&P, we want to see what's going on with IBM, Goldman Sachs to gauge a direction for the futures markets. Would you consider 2-candle flip on that big drop on the left? Yes, good eye, Pevneet. So we do have one right at the top here. And I'm going to piggyback off of your comment here. Now, if we were watching yesterday, the markets, as we were just casually rallying before that pretty insane drop, actually on Wednesday, we had a 2-candle flip on the top side, which is going to be the opposite of what we look for in our long trades. But when we're looking for short trades, we want to see a green candle coming up and a red candle closing within the range of the green candle. 2-candle flip for our short trades, our entry point would be taking the breakout. Short below support. When you identify those 2-candle flips, look to trade in the direction of the flip. So there was a short 2-candle flip short there, move to the downside. If we come back and look at the origin of some of these moves higher, red candle coming down, green candle closing within the range of the red candle, 2-candle flip there, nice move to the upside. So the goal is to get in on these trades as soon as the 2-candle flip is formed to get in on some longer running moves. 2-candle flip, long running move to the upside. So we do have a 2-candle flip up at the top here for a potential short trade. What would be the concern with going short at this 2-candle flip zone though? So we have a 2-candle flip long trade and we have a 2-candle flip short one. What would be the issue with this short trade 2-candle flip? Tim nailed it. I love when I get that answer quickly too, because it shows that you're incorporating trend, which is very, very important as well. Yeah, if we're trying to take a short trade, even though it's a 2-candle flip zone, it was formed on high volume, it's got all those odds enhancers we look for. When you step out, I mean, let's just zoom out to the monthly chart. Actually, a lot of my zones gets kind of muddy with the text there. But if we just step out to the monthly chart and we go back to the year 2000 and up, even before then, huge uptrend on the S&P. That's why it's important to say we're in an uptrend on the S&P and we've been making all-time highs over the past several decades. Then taking a short trade may be elevated risk, even as we drop down from the monthly to the weekly to the daily. Daily chart's still very much an uptrend, and we're looking to trade in the direction of the trend. There we go, CS, yeah, good comment. It was a private message, but just want to read it from CS. Higher risk, so expect it as counter trend trade. Absolutely. The other thing we could do is, so if you're, as you're mentioning, it's counter trend, it's higher risk, it would be a counter trend trade. Knowing all that, what if instead of going short here, when it rallied up, we waited for the other people who didn't know what the 2-candle flip was to go short, waited for them to think that they're making some profits, markets are dropping, they get the pullback, but then we go long on that short squeeze to the upside. So sometimes when you can identify those counter trend zones that are higher risk, wait for price to go into the zone, get a little bit of confirmation that, all right, there's some selling coming in, people are happy about their short trade, but when we can understand the bigger picture, higher time frame trend, wait for that pullback, wait for your 2-candle flip to form, look to go long on that breakout to the upside. It's going to likely be a nice short squeeze that squeezes out all those short players. Yeah, I like to think, where are a lot of the novice traders placing trades? For me, they're ones who aren't really good at trend. So Tim, great job on that one. And also CS and understanding, it's a higher risk trade. So use those to your advantage. If it's a high risk trade, we want to pass on those, but use it to our advantage in saying, all right, let's wait for that pullback. We'll wait in the weeds and then get in on confirmation with the next 2-candle flip to the upside. Great comments and questions and everything. Absolutely love it. All right, so that's our S&P analysis. Notice IBM is moving up, Goldman Sachs is moving up as well. These are the stocks that can be key odds enhancers for where the futures market is going. IBM, Goldman Sachs, that's the cash market. Futures market is a derivative, which follows what the cash market is doing. Let's do the other equity indexes, since we're just kind of going through the process. It's going to be a pretty similar picture here as far as NASDAQ daily chart. We're in an uptrend. So even as price is dropping like it did on Wednesday, and I'm sure a lot of people were going short, but you got to ask yourself, price stopped here. We didn't have a huge down move that I'm sure a lot of people were expecting. Why did price stop here? Look left. And remember, daily chart, red candle, green candle, 2-candle flip. Price stopped in our daily 2-candle flip and changed direction. Now that would be a crazy zone to take. I'm not saying find your zones on the daily chart and trade them, because the risk would be astronomical, but use it as an odds enhancer to gauge trend, to gauge where you're anticipating price to change direction. And that's where you can zoom in for more active income trading to the smaller timeframes to find your key entry points to splice in. We have that daily 2-candle flip. Price held that, changed direction. We're getting a nice breakout to the upside from this. Actually, let me quiz you guys here. See how many of you guys are putting these pieces together. What do we call this formation here where we have these 2 wicks crossing? Who knows what we call that? Yeah, good job, Mark, Randy. Great job, everyone. So proud of you. Wick over wick, absolutely. Wick over wicks, we see those as continuation patterns. Good job, Ken. Yeah, so we're getting that continuation move from our 2-candle flip. Can you see how a lot of the analysis we're doing is on the daily chart, but it gives us a better perspective when we do want to splice in on the smaller time frames. Keep that in mind. Big picture perspective. Our trading tip of the day was why many traders fail is because they miss the biggest market moves when getting trapped on the smaller time frames. I'm not saying don't trade the small time frames. I'm just saying don't focus in on those first without seeing the bigger picture. Zoom out to see the bigger picture and trade with greater confidence. Exactly what we're doing with having the daily as our foundation and then going down to the smaller time frames to find our ways to splice in. Keeping that in mind, we also have a 30-minute 2-candle flip zone on the NASDAQ. Red candle, green candle. We're looking at 16,865.25. Stop at 16,814. Again, based on that 2-candle flip zone. All right, looking for potential setups. Let's see. So we missed our first breakout trade here. We can see this is where sellers were coming in, pushing price down several times. And then ultimately the buyer stepped in, took out all of the sellers that were there and pushed price up. Crude oil, thank you, Randy. Gold, love that one. Let's jump over to crude oil. So we triggered on this one, dropping down. Anyone remember what time frame we're on? Let's see. Just drop it down to the 15-minute at this point. All right, we're getting our breakout. We're up about 20 bucks on this move higher. Got to see some more momentum to the upside, but in putting those pieces together, trading with the trend, looking for the sellers to be eliminated, and then looking for our key entry points on those breakout points. Our stop and to manage our risk was based on our 2-candle flip zone, which we identified on the 10-minute time frame. Coming down to the 10-minute. Here's our 2-candle flip, red candle followed by green candle, placing our stop at 74.44. So that's where we use higher time frame analysis to see the bigger picture. And then we manage our risk on looking for those momentum breakout trades when we identify our 2-candle flip on the smaller time frame. So we're in the process of getting that breakout. Our stop is in play. We're entered long on the breakout in trading with this trend. You can see it's a way to get in sooner versus waiting for price to come down to your zones. Sometimes if you're waiting for your zone entries, which was this one down here, they may never get triggered. So we do want to find those ways to splice in sooner and take advantage of some of those longer running moves. See, hey, Pevney, so where would be your entry and stop on NASDAQ? Okay, let's jump back out to NASDAQ. We're in on crude oil. We'll see how that one pans out. So on NASDAQ was waiting for our 2-candle flip down here. Yeah, so let's see, it did have the breakout already. We're already moving to the upside on NASDAQ, so we do want to find our next entry point. Hourly chart, I'm going to go base off of, what CS and Tim were mentioning before and looking at our opposing zone. So here's a 2-candle flip. So what I would be anticipating is that some people may be using this. Actually, it's only here at, I came up with it, so no one else should be using it unless they're part of our group. But anticipating price to rally into that 2-candle flip, getting a pullback, seeing the shorts be happy for a little bit, and then I'll look for a new 2-candle flip to form to then take the breakout to the upside. Yeah, so our zone entry hasn't triggered. We already got the breakout, so we simply just want to be patient and waiting for the next setup. That setup is going to happen when we see price come into our counter trend, elevated risk, 2-candle flip zone, get that pullback, and then splice in on the next breakout to the upside, waiting for our 2-candle flip to form here, and then we'll use that to place our stop. But it's still got to happen, but keep in mind what we're doing is forecasting where we're anticipating price to change direction, and we're using trend and higher time frames to our advantage to look for those higher probability entry points. Again, NASDAQ waiting for that rally into this 2-candle flip, pull back, and then getting a nice breakout to the upside. All right, so that's NASDAQ. Let's jump over to the Russell. Wow, Russell already had the breakout as well. So same picture, red candle followed by green candle, 2-candle flip formation, wick over wick continuation pattern, breakout to the upside. So Russell's currently underway. Let's take a look at the Dow. Similar picture with the Dow, as far as the two candle flip, the wick over wick underway. So we're looking for our next entry point to go long. Dropping it down to the hourly chart. All right, so our breakout. Here's our two candle flip. We got close. This was our prep screen zone. Sometimes it can get close to your zones, not quite test it, and then get the move. That's where if price misses your two candle flip zones, still pay attention to where you have your potential breakout trades, and you can use those as your entry points instead. So breakout trade to the upside already underway. In this case, I'll wait for price to come back down to my two candle flip zone. 37,549. Stop at 37,462. That's if price does come back down. We're getting a really nice move from our breakout. Remember, it's all about that battle of the buyers versus the sellers. Sellers were completely taken out here, blown through to the upside. The next spot I'm going to be looking at is the shorts have one more shot right here to potentially take a short trade. Buyers are in control though. Buyers are taking out all these shorts. If I can see price come into that two candle flip, get a pullback, we'll look for another breakout trade or a new two candle flip to form to then take the breakout to the upside. So we're waiting at this point, but we are prepared for what is potentially going to happen moving forward. Also notice this two candle flip zone below. Good odds enhancer for identifying them is notice this two candle flip. Where did it stop and change direction? Price dropped down and hit a previous two candle flip and rallied to the upside. So those two candle flips are holding, they're forming and pushing to the upside. So I'm looking for the buyers to be in control and looking for that next breakout to the upside. So we'll see, again, no good entry point unless we got in on this initial breakout. That would have been the better entry point. In looking at the indexes as a whole, I have my index grid just to gauge if they're all moving in the same direction or not. You can see S&P is moving higher, Dow got that breakout, NASDAQ got that breakout, and then Russell as well. So we're all moving in the same direction. That's an odds enhancer to look to go long the equity indexes when they're all correlated and moving in the same direction. It is elevated risk, and sometimes we see this in live trading where the S&P may be moving up, the NASDAQ's moving down, Russell's chopping sideways, Dow's moving down. In those situations, you want to be aware of it and understanding the markets are choppy, the indexes are not correlated, and we want to be cautious with our trades for the day. See, hey Daryl, let's see, on two candle flip, bullish example, if it is green candle closes above the previous red, i.e. bullish engulfing, is that an odds enhancer like a super two candle flip? I like that, Daryl. All right, so what Daryl is asking, a little bit different picture. I don't use the bullish engulfing. I would say it's something you could test potentially. So I think I'm getting what you're saying. So we have a red candle coming down and then a green candle that doesn't close within the range of the red candle, but it actually engulfs it, which would be a bullish engulfing candle. I would say, test it. I don't use those as much. I think the issue with those would be that if it's bullish engulfing like that, it has the potential for more of a pullback. So what I mean by that is that, let me remove this. Remove. When we find that the two candle flip is closing within the range of the red candle, it gives us a better entry point on a breakout trade to the upside. If it engulfs, I would say it's probably pretty strong. I would just not be sure where the entry point would be at that time. But I would say as an odds enhancer, it's a strong candle. I would still use the 2 candle flip for the entry point though, which is what we're using on those breakout trades. All right, so crude oil pulling back a little bit. We got the breakout, our 2 candle flip zone still in play. So we're just waiting on that one. Yeah, bullish engulfing, I don't look at those too much. I'm glad you brought it up, but I would say the strength is there, which is why it engulfs the previous red candle. But yeah, the 2 candle flip is what gives us our entry point a little bit better. Maybe use both of them, I would say. Could be a good odds enhancer. I like that. All right, crude oil, we're still waiting on this one. We got a little bit of a breakout. Our stop is in play. Just got to see if there's more momentum to the upside. Equity indexes all rocking to the upside as well. So all good there. Let's see, and then back to gold. Still cruising. Again, these are the trade setups that we want to take, is the ones that have the longer running moves, the biggest profit potential. And those are the ones when we step back out to the daily chart, we can see it more clearly why price is having this move to the upside. It all starts with the 2 candle flip, seeing the battle between the buyers and sellers, and understanding that when the sellers are taken out, we look for the buyers to take over and push to the upside. Doug's question is, what is your win percentage on the 2 candle flip? Good question. So I've been using it for several years now. I would say 8 out of 10 is typically the percentage. Keep in mind, and I haven't tested the 2 candle flip on the smaller time frames as much for entries, but if you came down to the 1 minute time frame and started trying to find 2 candle flips, they may work. Let's see, here's a 2 candle flip that was formed. Price came down, changed direction. The issue here is that you may get stopped out more easily, because remember, our trading tip of the day is that traders can fail. Even the 2 candle flip can fail if you're stuck on the smaller time frames. If you're on, the 1 minute, the 5 minute, the 10 minute, I would say you should be looking to get out within 1, 5, and 10 minutes. So for me, and looking for longer term trades, I look and focus on the daily, because I'm trying to stay in those trades for a day. Smaller time frames, you want to get in and out more quickly. Those can give you some of those, smaller moves, but greater profit potential on taking a quick move. So again, it all depends. I would say it's going to be the most impactful on the monthly, the weekly, and daily chart. Let's see an example here. So I'm on gold, I'm on the monthly. Here's the origin of this long running move. We have a 2 candle flip. Price had a nice move to the upside. At the origin of this down move, we had a 2 candle flip here, which led to a longer running short trade. So it can work on any time frame. Remember, it can work on monthly, weekly, daily, as well as the smaller time frames. We just want to be able to build our confidence reading the price charts on the higher time frames, and then splice in on the smaller time frames. So it works. The more you use it and test it, you'll see how price has those strong running moves, since it's the origin of those turning points in the markets. But it's really all about how you implement it, and that boils down to your trading strategy. Great question though. Let's see. So what is exit and target for gold? All right, so gold still rocking. So target price, what we like to look for is use the opposing zone for our exit or target. So typically if we're in an uptrend, or if we're in a downtrend, I'll use a 2 candle flip sell zone to manage our risk on that trade. Now, gold, we are at all-time highs. Go back to the monthly chart, see the trend. We've consistently been getting higher prices on gold. Just earlier this month, we broke those all-time highs and made new highs as gold hit that 2150 mark. So trend is up. As far as target price and exit on gold, really looking to stay in it longer term. So what I would say is I don't have necessarily a point that I'm saying, all right, I'm going to take my profit and leave. But in this one, I would trail my stop up to capitalize on the profits and lock in those profits as the markets are moving higher. But because we're in such a big uptrend and we made all-time highs on gold about 3 weeks ago, we're looking to stay with the trend to the upside. So yeah, again, it boils down to your trading plan. If you want to take profits quickly, lock in those profits. If you want to trail your stop up, I would say that's better in trending markets. But especially in gold, with us making recent all-time highs, we're really looking to stay in this trade setup longer. Use 1 hour and 2 hour for the flip, Doug, absolutely. So gold, we're in an uptrend and talking about, where are we taking our target and profit at? What you can do, and sometimes I'll do, is drop down to the hourly and I'll look for my 2 candle flip candles, maybe on the 1 hour, 2 hour, and use it to trail my stop up. I'm not seeing it on the 1 hour. Let me drop down to a 30-minute. Let's see. This one actually doesn't count because we have a red candle coming down, green candle closing, but then this wick goes lower. So if there's a wick that goes lower than your 2 candle flip, can't use it, gotta find a new one. And try the 20-minute. All right, so in trading gold and going back to the target price, I would trail my stop up based on our recent 2 candle flip that was formed. Red candle, green candle, I'd place my stop up at 2076. Keep it simple. I couldn't find it on the 1 hour or the 2 hour, but you can use it as entry points and as target prices, Doug. Good question. Yeah, whatever time frames you look at, I'm not here to sway you if you like the smaller time frames or trading the 1 hour, 4 hour, or monthly, weekly, daily. Just keep in mind higher time frames are going to give you those longer running moves. Yeah, so Pavneet says a second candle flip like a twister, top or bottom. You could say that, yeah, because what's really happening is that there's a lot of selling coming in that's pushing price down. And then when price flips, takes all the sellers out and becomes a green candle, that flip is where we see the sellers are being eliminated, buyers are taking out the sellers, and we're looking for more momentum to the upside. Yeah, Steve, holding them overnight is ideal, especially in these longer running trades. Sometimes it's trickier because I do like to move my stop up, especially on gold. So the volatility could stop me out if price comes back down, but then I'm simply looking for the next setup to form. And then I'm keeping an eye on the 6 p.m. futures market open. That's a key one where I identify and reassess my entry points. Let's see, are you looking to cross body or range? So the 2 candle flip, we want it to close within the range. So it's a simple flip, and going back to gold down here, the origin of this move to the upside from November 11th, red candle coming down, we got that flip where the buyers are starting to take out the sellers. We want to see it close within the range. So we want to see it close within the range, and then we get more confirmation of the buying when we continue to push to the upside. A lot of great questions. If you're not in live trading already, I would encourage you to do so. Let's just take one more look at crude oil, see what's going on there. Hourly chart. No, the questions are good, and I love it because you're seeing what's going on and you're in tune with the 2 candle flip, which I want you to be. The more questions you ask, the better. I've been there, done that with asking a million questions, trying to learn this. So don't ever think you should stop asking questions. If anything, keep asking them. That will help you get your trading to where you want to be sooner than later. So 2 candle flip, we got the breakout on crude oil. We're seeing a little bit of a pullback. Our 2 candle flip is still in play to manage our risk. So we're just looking to see if we can get more momentum to the upside. Our stop is currently 74.44. We entered the trade on our breakout, waiting for crude oil if it is going to continue to the upside. Let's see. We also did have some economic reports just come out as we're getting to the end of our session. New home sales and consumer sentiment. Let's see what the new home sales numbers are and consumer sentiment. New home sales, a little bit lighter than the consensus. And let's see, consumer sentiment, this was a big one. Falling right in those ranges, so nothing crazy right there. Looks like it's reflecting the markets positively. It's helping crude oil push to the upside. We just got to see if this move can continue higher, but we are in crude oil on that breakout. Markets have been moving higher. We're looking for those ways to splice in with those 2 candle flip patterns. Awesome. Great job, CS. I do want to encourage everyone. So if you're not part of the live trading room already, there's so much to cover. Strongly encourage you guys to join. Keep in mind, I am doing a couple holiday specials for Christmas, for New Year's, and just for the holiday season in general. If you do register for live trading with Kate, I do these sessions just like how we do now. A little bit less teaching, but if you have questions, I answer them during the sessions. Monday, Wednesday, Friday from 9 a.m. to 10 a.m. Eastern time, and you will get a 30-minute complimentary one-on-one coaching session with me. So I have so many students I've been coaching. I'm so happy to be doing that with all of you guys and meeting you face-to-face in these sessions because they help me to really hone in on exactly where you're struggling, where you look to achieve certain goals. I've been helping to build trade plans with a lot of students. So if you are interested in the live trading and you see the 2 candle flip may be something you're interested in, sign up for live trading. You get that 30-minute complimentary coaching session with me, and we can go over what some of your struggles are. If you need help building a trade plan, we can do that. If you need help with the 2 candle flip in general and where the entry points are at, it's all going to be included in that. So the 30-minute one-on-one coaching session, $75 value, and you do get the recording so you can review it after our coaching session. But yeah, you do get that when you register for live trading. So hope to have you guys all there. Monday, Wednesday, Friday, 9 a.m. to 10 a.m. Eastern time. You get the recordings after the sessions as well. It's $125 a month. If you want to make it easy, scan the QR code to register for live trading. You can also go to my website, which is kaittrades.com, KAITTRADES.com. Click on the courses page, and then click on the first one here, which is register here. I'm also doing some specials on the one-on-one coaching. So whether you've done it with me before or not, my specials for this month is if you buy one session, you get one free. Keep that in mind. I'll say that again. If you buy one coaching session online, you'll get one free. So 2 for the price of 1. Or if you buy the package of 3, you get $100 off. So that I'm just kind of verbalizing. It's not on the website at this point, just because it is a holiday special. If you have any questions, email me. My email is tradingcoach@kaittrades.com. You can also go to my website, kaittrades.com, click on the contact button, and you can fill out a message for me there, and I'll get back to you. But yeah, holiday specials, sign up for live trading. You get that 30-minute free one-on-one coaching session. Again, that's going to be if you want to see more implemented in the live markets. We'll be doing more live trading. Couple great testimonials from students. Hostos, I'm not sure if you're in the room. Randy's here. I had one before from Anin. Just a lot of great feedback from students who have implemented the 2 candle flip. We talk about wick over wicks. It's really a great way to simplify trading for you guys. I know the struggles, I've been there, the ups and downs, the rabbit holes, the stress, and I want to relieve that for you guys. And again, my years of experience, my goal is to simplify it, not make it more complicated. Trading's complicated enough, no point in making it more challenging for you guys. Let's see, I'm just checking the chat again. Yeah, thank you so much, CS. Great questions and comments. Shelly, great job. Thank you for being here. Dwayne, thank you as well. Yes, so the recording from this session will be recorded. I'm going to post it on YouTube. Since you all are in the session, you'll get an email after I'm finished with the link to the YouTube recording, which will be public, so you can watch it at any time. And I'll include, again, my email as well, so you guys can sign up. And just before we wrap, again, take a look at the testimonials. I have plenty of those. Anyone take our crude oil trade? Had to deal with a little bit of volatility, but we're finally getting that move. That's why it's important we have our stop in play. Remember, we don't want to move our stop. Don't be one of those people that moves your stop down and you're taking on more risk. I don't like that. It happens, but we want to be trading in the direction of the trend, not extending our losses when it's going against us. Crude oil working out. Let's see, Colette, nice job. Mark is in. Good job, Michael. Randy in. All right, we're getting that move to the upside. A little bit of volatility. Keep an eye on crude oil. Gold was also the other amazing trade of the day, our trade for Friday. And Colette, I'm glad I got to do that session with you yesterday, just really putting all those pieces together and seeing that the nice profit that we got for you. So great job, everyone. Merry Christmas, Randy. I'll see you, I think, I'll see you soon for our next session. Yes, let me post my email and a couple other links if you want to copy those. Yep, Pavneet. So if you want, sign up for the live trading, and then you'll get the 30-minute complimentary coaching for free. If you have questions about one-on-one coaching in general and how we can tailor it, just shoot me an email. I try to respond to people within 24 to 48 hours. My email is tradingcoach@katetrades.com. So that's my email. Make sure you save that to sign up for live trading. Sessions are Monday, Wednesday, Friday, 9 a.m. to 10 a.m. Eastern time. Some people ask me why I just do it for an hour, but honestly, in trading, I don't want people to be stuck at their computers and over trading and getting stressed. And my goal is to simplify it. You really just need 1 hour to get all the basics down, understand where the markets are going. So we keep it an hour, 3 times a week, recordings provided. And then if you are interested in the coaching specials, when you buy it online, remember it's buy 1 session, get 1 free. So 2 for the price of 1. And then if you buy the package of 3 sessions, let me bring that up. So the last link I posted is for the one-on-one coaching, which is this tab here. When you buy the 1 session, I'll make note of it that you were in class today and you'll get 2 sessions for the price of 1. And then when you buy the 3 sessions, you get $100 off of that for the holidays. I know people are busy. I'm going to be traveling a little bit as well for the holidays. So you can always buy it now and then we can schedule it after the holidays if you have more time then. It's really flexible. I know also some of you guys have bought the coaching and haven't reached out to schedule those sessions. Reach out, just stay in touch. I'm happy to schedule them in the future if you want, but get on the calendar. Getting pretty busy with coaching and I want to, see as many of you guys as possible and help you with your trading, whether that's building a trading plan. Again, I've been doing a lot of those lately, building a lot of diagrams and some trade maps to help you navigate the price charts, a lot of things that are just based on what each student needs. Let's see, just checking again. Tim set up for the lower zone, 74.31. Nice job there. Again, if you have any questions on the one-on-one coaching, email me at tradingcoach@katetrades.com. Greg, Merry Christmas. Dwayne, Merry Christmas. So good having you guys here. Yeah, so on the website, I don't really have courses yet. I've been getting requests for like an actual class to teach the two candle flip pattern. For now, I don't have anything set in stone. Possibly in the future, let me know if that's something you're interested in. But to get more context on the two candle flip, I would say either join the live trading or sign up for the one-on-one coaching with me, and I give you a much deeper dive in exactly what to look for: entry points, exit points, targets, daily charts, if you're active income, smaller time frames, all that good stuff. So yeah, no full courses on the website. And I'm sorry, guys. Right now it's just the live trading. So courses, right now it's just the live trading with me, $125 a month. And again, you get the recordings. So even if you can't attend every day, watch the recordings after the session. Some of the trade setups we do are longer term trades anyways. But if you do request some more active trading, we do live trading in the sessions as we did today on crude oil and on gold. Yeah, no real schedule quite yet, but you guys are giving me some insight on what I need to build out. For the one-on-one coaching, I would say I'm pretty available in January as of now. I would say the sooner you sign up, the sooner I can get you on the calendar at your preferred time slots. Monday, Wednesdays, Fridays, I do classes. So if you do want to do coaching with me in the morning around when the market opens, which is 9 a.m. Eastern time, I have Tuesdays and Thursdays open. And then some people also like to do the evening sessions when the market's open around 6 p.m. Eastern. Keep that in mind. Just give me your preferred time slots when you sign up. And let's see what else. When your classes during holidays. Yeah, so I'll send out, if you're signed up for live trading, I'll be sending out an email after today's session with my schedule for next week. Christmas is Monday. I'll be doing class on Wednesday and possibly Tuesday, just to make up for some of my travel days. But I'll be sending you an updated schedule today. So keep that in mind. See, Daryl, yes, you did sign up. So I saw your email. I'm going to get back to you on those dates. Yeah, I'm getting pretty busy for the rest of this year, just with the holidays and Christmas and everything. Daryl, I'll get back to you on your email right as we end. And then, yeah, if you are interested in signing up or want to save those sessions for after the holidays, you can buy it now and save them for a later date. Again, info on live trading, $125 per month. Scan the QR code. You're going to get the live trading 3 days a week, hour each day. Interaction from the students who, I love everyone in live trading who has been implementing the two candle flip and really seeing it work out. And then just a lot of testimonials I've been getting from just recently. I wanted to give you guys recent testimonials from students who have really been seeing the two candle flip pattern work and using it to their advantage. Alrighty, Merry Christmas, everyone. Happy holidays, Happy New Year. Stay on a lookout for the recording as we end today's session. If there's no other questions, shall I give it a couple more seconds? Any other questions? Yes, Shelley, if you sign up today, you'll get the recording from today's session. I'll make sure that's in the email to you. Yeah, I would say sign up today. The offer does expire January 5th for the free 30-minute consultation. So when you register for live trading by January 5th, you'll get the 30-minute free coaching session included, which is a good way for people who have questions. If you are struggling on building a trade plan, if you're struggling on your entries, are you staying in trades too long? Are you concerned with the trend? Are you getting stopped out more often than you should be? There's so many different issues that I go over with everyone and really tailoring these sessions for your needs. So again, sign up for live trading. You'll get that 30-minute complimentary session with me. We can start scheduling these sessions as early as next week or whenever you're available after the holidays. Oh, very nice, Dwayne. Thank you. Liked your link to 3 of my friends. Absolutely. Would love to have them. And, I am a small company, just been doing this for a couple months now, but I love being on my own because I'm doing things my way. I want to simplify it and do things how they haven't been taught before in trading. I don't want to make it complicated for you. I want to simplify it as much as possible. So if you have people that you know or friends that would be interested in a simplified way of trading or need help with their trading, feel free to send them my way. I'll be sure to give you guys a referral discount as well. So keep that in mind. Yeah, love seeing you, Dwayne. Everyone else, Merry Christmas, Happy Holidays. Any questions, reach out. I'm always here. Thank you guys so much. I don't want it to end, but we're going to wrap it up. Have a great rest of your day. The recording will be available on YouTube in about 30 minutes, and you guys will see an email from me. Have a great day, everyone. Bye-bye.